Hey everybody, it's Hussein Kabani, your favorite broker. I've got tons of questions about when to start buying investment real estate. I'm going to try to break this down for you guys in my opinion of when you guys should start to buy investment real estate. There's a saying out there that says the best time to buy real estate was 10 years ago. The second best time is now. And I really think it's true. You just got to evaluate the opportunity. But I've run across people where they've talked to me about buying investment real estate. So they actually have their own house right now that they own, and they want to start to buy a condo unit or another townhouse or something else like that. They may have a kid or two kids, and they want to start to kind of like plan it out for their kids as well, because where they're seeing the market go, they can kind of see that 20 years from now it looks pretty, dim if at all possible for their kids to be able to buy real estate. And also not just for their kids to possibly live in there, but it is a great investment vehicle, right? So like if you're going to hold on to real estate over the next 20 years, you're likely going to end up doing really well on it based on statistical information that we have. So the question is, when is the right time to buy real estate? Again, I would say the right time to buy it would be now based on the opportunity that you're evaluating. And I would say that because we've always seen it gone up. I've pulled history for the last 25 years from 1996 to 2021. So basically, I will say that on average it goes up 7%, but it's not straight 7%. You can't guarantee that it's going to be 7%. I'm going to basically share a chart with you guys, and you guys are going to be able to see from the Toronto Real Estate Board in Toronto and in Durham, you're going to see that the rate year over year is very sporadic. So you can have 4.4, 3.7, 3.6, 5.6, 4.8, 8.6, 7.3, 8.6, 6.4. So this all just kind of keeps going, okay? And there are some numbers if we go further down this that it's going to be negative numbers. But now if we average everything out, and surprisingly we average out everything from the Toronto Real Estate Board, Toronto and TREB, each one of these numbers come up to around 7% increase year over year. So that's the number I look at. So if you guys follow my videos, you guys are going to know that whenever I'm into real estate, I'm in it for the long run. I don't plan on selling it. And that's why I use this rate of 7%. And I use that previous history of what's actually kind of happened. So it may not necessarily be 7% for the next 2 years. It might be 5% or 13%. It doesn't matter. But in the next 10 to 20 years, where I'm looking at my target being, I know that more or less I'm going to be across 7% year over year. Now, most of the pushback, or most of the concern I should say, I get from clients when they're considering buying investment real estate is that what's going to happen in the future. So I'm going to commit to buying something right now, whether they're buying resale or they're buying new construction. The concern comes up of, how much rent am I going to get for it? What if I don't find a renter right away? What if their tenant trashes the place? If I buy new construction, what happens in 3 years when the place is going to close in 4 years and I can't afford to buy, I don't want to close on it anymore? How much are the condo fees going to be? So I totally understand and appreciate that there's so many different factors of actually investing in real estate. But again, I have to go back to saying in the long term of real estate, we've seen it constantly appreciate at 7%, which it becomes to being a really, really big number. So I would say that at some point you're going to basically have to take a risk. There is risk involved with this. This is an investment, and there's no investment out there that has zero risk, okay? So this is going to have a risk. But in my opinion, from where I sit, I feel like this investment actually has one of the lowest risks out there, okay? Based on proven data. And it's, for me, I don't really play the stock market, okay? Whenever I buy a stock, I should call people and tell them to get out of that stock because it's going to go down, because I do horrible at the stock market. I purely just speculate on it, and it's not a good way to play it. But something like real estate, having a mindset of saying that I'm going to be in it for the next 10 years, 20 years, it's really going to be a safe bet. To get over the concerns about this is going to be tight for me right now. And unfortunately for most people, it is going to be tight. I have an example of somebody that may be selling their property and moving on to another property, and they don't necessarily need to carry all of their down payment over or their equity over into their new property. This would be a great time for them to basically say, hey, we're going to take about $100,000 or $120,000 out, and we're going to put it onto a down payment or a deposit for another property. Now, that will make your budget tighter tighter for sure. And if you can kind of see a way of navigating around it and you can come up with a budget and things get tighter, you're going to have to cut back on certain things. I think that's probably the right thing to do at that point, because you're never going to have a guarantee that you're always going to be okay. But there is a risk, and I think you're going to have to calculate it out in a way that it is tight, but it is going to be somewhat manageable if you stick to a budget. I think if you can kind of do that for like 3, 4, 5 years, then you're going to start to see the reward of actually being invested in real estate. Because when you go to refinance that property, you could probably bring your payments lower, or when you've paid off enough equity into it, you're going to be able to kind of have a lower payment. And like I was saying, if you go to refinance it, you might be able to actually even buy something else. The other concern that happens is that, look, the rate at which real estate is actually increasing, even if we follow buildings from, like in Pickering that I've been following, Universal City 1 to the building 4 that they've just launched, the spread on those pricing is huge. So even if we look at something like that, some people that would have had the ability to buy in building 1 based on where prices are, they wouldn't be able to buy in building 4 because that's out of their realm. Now they're going to be building 7 buildings there. So if you don't buy in building 4, are you really going to be able to being able to afford to buy into building 7? There's going to become a certain point where you're going to be tapped out and you're not going to be able to afford to buy into that market as well. So the sooner you get in, chances are you're probably going to get in at a lower price than you would in 2-3 years from now, which would make it easier for you to get in. And in that time, hopefully you should have been able to build up equity. And you can basically do this in use this in your advantage in 2 parts. Basically, have your payments to be lower or be able to leverage that equity to further invest in real estate. If you guys have any specific questions about, why or why not to invest in real estate, or if you have some specific hesitations of why you don't want to enter the real estate market, feel free to share it with me. Send me a DM, send me an email, leave me a comment. I'd be more than happy to kind of get back to you with what my thoughts are on it. Do me a favor, guys. Share this video, like it, leave me a comment, send me a DM. Until next time, remember one thing, get Cabani, get sold.
Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.